Good morning, friends. Are you able to hear me? Hello. Good morning, friends. Are you able to hear me, friends? Shall we start? So, in the last class, we discussed about utilization of input tax credit. Right, friends? So, first, IGST need to be set off IGST credit, okay, which need to be set off with IGST liability. After set off with IGST liability, if anything is there, then it can be set off with what CGST and SGST or UTGST, okay, in any proportion, in any manner. Same way, CGST, first it need to be set off with CGST, okay, then, okay, anything is left out, IGST. That the tax need to be given what priority first. Then only we can go for what the next. But in case of SGST, CGST, okay, cross-sectional utilization of credit, which is not possible, Clarity is there? Okay, that is what I said that earlier, the central sales tax, which has been replaced by IGST now, it is based on origin-based taxation. Okay, whereas after IGST has been introduced, okay, the selling state that is the consumption state will enjoy the revenue. Okay, so it is a destination based consumption tax. Destination based consumption tax. In the example itself, we have discussed. Clarity is there? Input tax credit to be broad based by making it available in respect of taxes paid on any supply of goods or services are both used or intended to be used in course or furtherance of business. Okay, so it is not that there need to be a direct relationship between what input and output. Okay, even if you pay the tax on audit fees, that can be adjusted with sale of goods. That is, for example, a manufacturer manufacturing the goods, on which he manufacturing the goods and supplying the goods, on which he need to make the payment of tax. That is outward tax liability. Okay, he can use the tax paid on statutory audit fees. Okay, so the tax paid on services can be used for what outward supply. Okay, outward supply may be any goods or services or both. So cross sectional, okay, that is there is not there is no necessity that input and output need to be what related. Okay, there is no direct relationship, but only thing you need to ensure that it is used, okay, or intended to be used in course or furtherance of business. For example, sir, you are buying a laptop for personal use. Okay, can I take the credit? No. Okay, only if you buy the, okay, laptop for business use, then only what you can avail the credit. So for availing the credit, okay, it need to be used in course or what furtherance of business, and you need to be a registered person. Only registered person can claim what input tax credit. Clarity is there? Then, sir, electronic filing of return. The success of GST is based on, okay, filing of return only, because here the input tax credit, okay, which has been made on a auto-populated basis. For example, one person sales is going to be another person purchases. So the moment I record all my sales, it will be reflected, okay, in my customer as their purchases, That is what we call it as auto-populated, okay, basis. Okay, it will automatically fetch the data of sales to their account as their inward supply. Okay, sales is nothing but outward supply. Purchase is nothing but inward supply. So there are three, okay, returns which are need to be filed. One is, okay, furnishing my outward supply, which is in the, okay, return number GSTR1. Okay, moment you file your outward return, okay, that need to be filed on or before 11th of the subsequent month. For example, we are in the month of what? October. Right. Now, sir, October month sales, okay, need to be informed to the department on or before 11th of November. Right. Moment you, okay, declare these are all my sales, okay, which you made to a registered person. Okay, your customer is what? Registered customer. Okay, then we call it as B2B transaction. Okay, business to business transaction. Registered person selling goods to another registered person. Registered person means person registered under GST Act. Okay, so the moment, okay, you are selling goods to a registered person, moment you file the return, that will be reflected as what? Inward supply, as their purchases, based on which they can claim the input tax credit. Okay, for example, I am selling goods to Pradeep for 10 lakhs, on which I paid tax at 18%. Okay, which comes to how much? 1,88,000. 1,88,000. Now, what Pradeep will do? Okay, moment I file the, okay, this GSTR1, that will be reflected in GSTR2 of Pradeep. Okay, So this 1,80,000 will be shown in the credit ledger of Pradeep. Now what Pradeep will do? Okay, Pradeep in turn he sells the goods. Okay, at 12 lakhs. On 12 lakhs, he need to pay tax at 18%. So which comes to how much? 18%, which comes to how much? 1,96,000. 1,96,000. Sorry, 2,16,000. 2,16,000. So 2,16,000, okay, is what he is liable to pay. Now 2,16,000 minus 1,88,000, which comes to 36,000. Okay, which Pradeep will, okay, make the payment and file a return called as GSTR 3. So R1 is what? Outward supply. Okay, GSTR1 outward supply, GSTR2 inward supply, then GSTR3, okay, the full-fledged return. Okay, now GSTR3, which we are calling it as GSTR3B. Right, sir. Then, sir, payment. Okay, I can make the payment of GST liability. Okay, through internet banking, electronic NEFT, RTGS, credit card, debit card. Okay, where the payment amount exceeds 10,000. Okay, you can make only what online payment. Okay, you can make offline payment when the amount is less than 10,000. Less than 10,000. And there is a provision that the government agency, okay, that is the government department or the government authority, income tax department, post office, railway, okay, or Mumbai Corporation, when they are, okay, being the recipient of supply, that is when they are procuring the goods or availing the services for which they need to make the payment. Okay, while making the payment, if the value of that goods or, okay, services or supply exceeds 2,50,000, okay, then they will deduct 1% tax and remit to what? The government. Remit to the government. That is informing that, okay, the government agencies informing GST department that so and so person who have provided, okay, services or supplied goods to me, okay, for which I have deducted 1% tax, that has been remitted to what? GST account. That has been remitted to, okay, GST account on behalf of the supplier. On behalf of the supplier. For example, sir, you are entering into a contract with Mumbai Corporation for 10 lakhs rupees. So I am the chief accounts officer of Mumbai Corporation. While making the payment, I won't pay 10 lakhs to you. I will deduct 1% of 10 lakhs, which comes to how much? 10,000. Okay, 10,000 CGST as like 1% of SGST means, okay, SGST. If it is a IGST transaction, if you are a other state supplier to Mumbai Corporation, okay, then I will deduct 2%. Okay, so 10,000 will be deducted. Okay, balance 9,80,000 will be paid to you as like income tax TDS. Clarity is there. Same way, there is a concept called as TCS. There is a concept called as TCS. Okay, in case of electronic commerce operator. Okay, electronic commerce operator, okay, is a person who provides a platform to, okay, meet both the buyer and seller, or I can say the supplier and a recipient. Where e-commerce operator liable to pay tax. So what happened? E-commerce operator will collect 1% of tax from the supplier of goods and services and remit the tax to the government. Remit the tax to the government in the account of that supplier. In the account of that supplier. Okay, and normally getting refund from the department, okay, is what very difficult. Okay, you need to prove that there is a unjust enrichment. Sorry. You need to prove there is no unjust enrichment. Okay, what is this? Sir, I have collected, okay, 18% of tax from a particular customer. Okay, whereas the rate as mentioned, okay, in the notification is what 12%. I have collected in excess. Sir, can I keep that, okay, 6% excess tax collected in my treasury box as a supplier? Hmm? Can I do like that, pa? Okay, see, whatever the tax you have collected, whatever the amount you have collected in the form of tax, that need to be remitted to the government account. Even for exempted goods you have collected tax without knowing the provision. Okay, for which what you need to make the payment to what the government account. Clarity is there. Sometimes what happen, There is a tax, but you are not aware of it. Okay, you have not collected tax. Can you say to the department, sir, I have not collected tax? What department will say? Dash dash. Okay, whether you collect tax from your recipient or not, okay, as a supplier, you are principally liable to pay what tax. Clarity is there? Are Baba, are you able to understand? Now, if this be the case, sir, in a particular case where I have collected tax in excess, okay, now that customer is claiming refund from me that you have collected tax in excess. Only if you make the refund of that tax, then only you can claim the refund from the department. Okay, for example, sir, you are willing to incorporate a company. I am a chartered accountant. You are approaching me, sir, I am willing to incorporate a company. Okay, I am saying all the procedure, what need to be done, everything has been discussed for an hour. After that, you are saying that, sir, I will come after a week. I am saying that no, Baba, I have spent nearly 1 hour time. Okay, at least you make advance amount of 10,000. Advance amount of 10,000. Okay, the moment I collect advance amount of 10,000 for incorporation of a company, okay, supply made or agreed to be made, which is liable for GST, right? So what I will say, you need to make 10,000 rupees advance as well as plus GST at 18%. So which comes to how much? 11,800. I accept the payment. Right? So what I need to do? I will keep 10,000 in my treasury box. 1,800 I will remit to the GST department. Remit to the GST department. Clarity is there? Now, sir, after some time, okay, you are coming back to me. Sir, I am not in a position to incorporate a company. Kindly refund the amount. Now at that time, I have paid 1,800 or not to the GST department. Now he is asking refund. If I pay only 10,000 rupees, then I can't claim 1,800 from the department. Suppose if I pay 11,800 to him, then I need to pay what I can claim what 1,800 from the department. I need to prove that burden has been burden has been reduced from the customer. That is, I have make a payment to the customer. Kindly you give the refund. Okay, I should not get refund of tax and enrich myself. there should not be any unjust enrichment. I should not make, that is, I should not enjoy, okay, money out of tax. Okay, only if that is proved, then only you can claim the refund. Then only you can claim the refund. Samjha? Are Baba, are you able to understand? Okay, self-assessment of tax. Okay, see, it is not that the department will come to every month to your place of business and check what are all the sales you made and check your purchases, whether eligible for input tax credit or not. And they will fill the challan. You need to make the payment. Okay, department will not do, okay, all this procedure. You need to do on your own. You need to, okay, truthful to yourself. Okay, that is what the self-assessment procedure. You need to assess your output tax liability and you need to make the payment. Based on which audit may be what carried out by the department, whether you have done that properly or not. Okay, so within how many years the audit can be taken up? Sir, 10 years before there is a sales, for which audit can be taken up now. Is there any limitation period? Okay, limitation period. Okay, if there is no short payment or non-payment of tax, erroneous refund. Okay, there should not be any, okay, fraud, suppression or willful misstatement. Okay, then within 3 years period the audit can be taken up. But when fraud, suppression, willful misstatement are there, okay, then the period for audit can be taken up for what 5 years. Sir, at the time of audit, okay, or inspection or search or seizure, okay, if they find there are arrears to be paid, okay, then they can what, okay, whatever the goods they have seized, okay, whatever the property they have sealed, okay, that can be sold by the department and recover that amount towards what taxes. Okay, sir, if I that is my right to, okay, judgment, okay, can be given by, okay, GST appellate tribunal. Okay, appellate tribunal is a quasi judicial body, okay, where department personnel will also be there, judicial personnel will also be there, okay, where the decision will be what taken. Sir, if I am not satisfied by with the judgment given by appellate tribunal, okay, then I need to go for what High Court. Okay, even if I am not satisfied with the judgment given by the High Court, okay, then I need to go for what Supreme Court. So first level, I need to approach a commissionerate of GST. Then I can appeal to the appellate tribunal. Okay, then I can go for High Court. Then I can go for what Supreme Court. Then there are provisions for contravention. Provisions for penalty for contravention of the provision. Advance ruling authority is there. If you want any clarity from the department, then you can get what clarification from this advance ruling authority. Then anti-profiteering class. That is what I said. You should see making profit. Is good. Is fine. But profiteering will amount to fine. That is penalty. Sir, you should not make profit out of tax. Which will amount to penalty. Which will amount to penalty. And during the transition phase from old tax to new tax, there are some transitional provisions are there in the GST Act. GST Act. So these are all the benefits of GST. These are all the benefits of GST. Please go through, friends. Friends, are you able to hear me? Hello. Hello, are you able to hear me? See, since okay, as I said earlier that GST is what destination based consumption tax. In case of export of, okay, in case of export supply which is not consumed in India, which is consumed in abroad, so India will not what levy any tax. Okay, so tax will not be loaded on what exports. Only we are exporting goods and services, not our taxes. So it will be a tax-free goods. Okay, so we are in a position to capture what the foreign market, as well as we are grab the foreign investment. Okay, so input tax credit will reduce the cascading effect. So there will be a harmonization of law, procedure, and rate of tax. So all the states will have the uniform law, okay, the procedure and the rate of tax. Okay, so it will boost the exports and manufacturing activity. Okay, generate more employment, increase GDP with gainful employment, leading to a substantive economic growth. Ultimately, it will help in poverty eradication by generating more employment and more financial resources. More efficient neutralization of tax, especially for exports, thereby making our products more competitive in what international market, give boost to Indian exports, improve overall investment climate in India, which will naturally benefit the development in the states. Uniform SGST and IGST will reduce the incentive for what evasion by eliminating rate arbitrage between neighboring states and that between intra and interstate sales. Earlier, okay, that is in the old tax regime, CST rate is what 2%, whereas the local VAT rate is what 14.5%. So there is a difference in tax rate. Okay, all those things are not there in what new GST. Okay, in GST. Okay, arbitrage means taking the locational advantage for profit. Okay, so all those locational advantage will not be there. Average tax burden on companies is likely to come down, which is expected to reduce price, and lower price mean more consumption. Okay, when price reduces, demand will increases. Okay, which results in increase in production. Okay, and which results in India as what a manufacturing hub. Ease of doing business. Okay, simpler tax regime with fewer exemption and reduction in multiplicity of tax that are at present governing indirect taxes. Okay, now the GST is what simplicity and uniformity is there. Reduction in compliance cost. Okay, there is no manual maintenance of records. Everything will be systemized. Simplified and automated procedure for various processes such as registration, return, refund, tax payment, etc. Earlier in the state VAT law, that is in old regime, even though you have make registration through online, you need to sign and file okay, in offline also. For getting a VAT registration certificate, it will take nearly a month time. But now, okay, in GST registration, within 3 working days, you can get a registration certificate. Okay, all interactions through common GSTN portal. Okay, GSTN means Goods and Service Tax Network portal. Okay, there is no manual intervention. Everything you can do through GSTN. Will improve environment of compliance as a return to be filed online. Okay, input tax credit can be verified online. Common procedure for registration. Timeline to be provided for important activity like registration. Okay, all are within a prescribed timeline. Electronic matching of input tax credit all across India, thus making the process more transparent and accountable. This is what auto-populated one, which I said. Okay, then final price of the goods will what happen? Reduces on account of input tax credit, which we have discussed in the second day class, I think so. Okay, price has been reduced. Okay, that is the final goods price in the old tax that is without VAT it is 2,695, but once the VAT concept which has been introduced in GST, the value reduces to 2,200. Okay, there are also a small taxpayer. Okay, there is a scheme called as composition scheme where they will pay the lower rate of tax. Okay, average tax burden has been reduced since the companies are not going to pay tax on their sales, they are going to pay tax on their value addition since they are able to avail what input tax credit. So their working capital will not be disturbed. Clarity is there, friends? Yeah. See, when you are purchasing a goods for purpose of exports, okay, you can claim input tax credit, but your exports are taxed at a 0 rate, okay, where you can claim that amount as a refund. You can claim that amount as a refund. Are you able to understand? See, whatever the tax you paid on account of your export supply, okay, as your inward supply, okay, then that can be claimed as input tax credit. But you may think that, sir, what I will do with that input tax credit, because my exports are what exempted. I am not liable to pay what tax on exports. What I will do with that input tax credit? Tell me what you will do with that input tax credit on exports. On exports, what you will do with that credit? Sir, for purchase of goods for export, can I avail input tax credit? Yes. What you will do with that credit? Okay, I can claim that as what refund. I can claim that as refund. Clarity is there? Sir, suppose if it is not a export, okay, it is a supply within India, okay, but it is exempted. In that case, what will happen? Can I avail input tax credit? Sir, I am purchasing the goods not for export supply, but for exempted supply. Please understand, when you are making the exempted supply, you are not in a position to pay outward tax, hence you are not liable to claim input tax credit. For this exception is what? Export supply. Okay, whereas export supply is also a exempted supply, but in case of export supply alone, you can claim input tax credit and claim the refund. Again, I am saying, friends, normally for exempted supply, you can't avail input tax credit. Since you are not liable to pay tax on your outward supply, you are not eligible to claim input tax credit. However, for export supply alone, you can, okay, avail input tax credit and claim refund. Clarity is there? Why? Because if you are denied input tax credit for exports, see, you are paying tax on purchases. The tax can be treated in two ways. If you are eligible for input tax credit, then the tax will not form part of your cost. If you are not eligible for input tax credit, okay, then whatever the tax paid on your purchases will form part of your cost. It will be debited to your trading or P&L account. Clarity is there? Are Baba, are you able to understand? Okay, now when cost increases, what will happen to price? Price will also increases. Okay, this tax will be loaded on the price. Then price will increase. Okay, this need to be avoided in case of export. So what happened? Even though exports are exempted, okay, you can avail input tax credit, so that will not be your cost. Okay, and you can claim that as what? Refund. Subject to the condition that you need to realize the export profits in foreign currency. You should not get that in what? Indian currency. You need to get that in what? Foreign currency. Why I am giving, okay, this advantage is what? Foreign currency flow into one nation. For that purpose, what I am giving this benefit. Clarity is there? Ray Baba, are you able to understand the input tax credit with respect to exempted supply and export supply? I need reply from your side. Samjha, clarity is there? See, one of our friend has asked, sir, what will happen to sales return? Okay, sales return, if it is after certain period, it will be considered as, okay, my purchases. That is, my goods is going out, again it is coming back. Okay, there is a provision for, even for what sales return. Okay, there is a provision. Okay, you can use the, sir, when you are making a sales, you will debit your debtors account. Now sales return, you need to credit your debtor so that debtor balance will reduce. Right? For that purpose, you need to issue a note called as credit note. For that purpose, you will issue a note called as credit note. This is what we need to, okay, do on account of what sales return. Clarity is there? Once you issue a credit note, okay, you ensure that your recipient also, okay, reverse the credit. Reverse the credit. For example, I sold 10 units per. Out of that, 2 units has been returned. Once I received a 2 unit as my sales return, I will issue a credit note. Okay, and also I need to ensure that my recipient, okay, reverse that input tax credit for that 2 units. Clarity is there? See, the role of credit note, the effect of credit note and debit note in GST return is what? See, that is what I said. Sir, if I want to increase your outward liability, outward tax liability, then debit note will be issued. Assume, sir, I have made a sale of goods 1 lakh rupees, where I charged 12% GST rate, which comes to 12,000. Then later on, I find out that it is not 12%, it is 18%. So I need to collect the 18% and remit to what? Government 18,000. Now there is this the 6,000 difference amount is there. Okay, for increasing the debtor value, and in turn it will increase my outward, okay, tax liability, for which a debit note will be raised. Credit note, when it will be raised, means suppose if you want to reduce your outward tax liability, actually it is not 12% tax, it is only 5%. Okay, at that time, what note will be issued? Credit note. See, again, in the books of supplier, okay, recipient will be a debtor. If the debtor balance need to be increased, then debit note need to be given. Okay, debtor balance will be debit balance. The debit balance need to be increased, not debit note. Sir, if the debtor balance need to be reduced, Okay, for example, I am giving a discount to my debtor. Okay, so debtor balance need to be reduced. So at that time, what note will be issued? Credit note will be issued. Are you able to understand? Yes. Shall we wind up? Any doubts? So debit note will increase the debit balance of the debtor. Okay, that is nothing but my sales. That is the outward supply, which in turn what increase the outward tax liability. Credit note will be issued to reduce the debtor, which in turn is nothing but the sales. Okay, so my outward tax liability will come down. This is what the role of debit note and credit note in GST return. Shall we wind up? I hope you have. Thank you, friends. Bye. Take care.